Hey, good morning, everybody. Welcome to the Ankerstar Wealth Morning Show. We have three exciting topics for you this morning. The first one always makes me happy to say new all-time highs. Now, we've been saying that quite a bit lately, even with little sell-offs, little tantrums, and it goes right back to new all-time highs. Can we expect that for the rest of the year or for the rest of time? I'll talk about that a little bit. But yes, new highs get more new highs, but at some point that ends and you go into a period of volatility. So that's going to be our first topic today. I'll be covering that for you. I'm also going to give you a little bit of a look under the hood at our top 10 holdings and kind of explain why we do what we do as professional money managers. And so either you know what's going on in your account, or if you're considering signing on, you can at least hear some of the thought process that goes into it. And then secondly, if you saw the Wall Street Journal article yesterday, because you get the print copy, which I know has at least a circulation of one named Mike Youngman. But if everybody else either saw it, online or heard from friends or saw some of the headlines, there's money that's putting together this Texas stock exchange. I didn't dig into it as much as I should because I know Mike's going to dig into it today. Is it going to happen for sure? Is it still in talks? Anyhow, Mike will talk to us about that. And then also, since beginning last year, early to mid last year, we started investing with Texas Capital folks here, which have a fund. They have TXS. Mike's going to talk about that. They have a couple other funds that you may have heard us mention, but basically kind of a Texas-centric sort of investment thesis, and we're super excited. It's done great, and Mike will talk to us about that. But before we begin, it's a financial education presentation. You have to do your own due diligence for acting upon anything you hear this morning. And if you want more disclaimer information, it's available at ankerstarwealth.com. The opinions expressed are Mike and mine alone. Let's share out some screens to you and talk about this new all-time highs, high fives across the board. I cherry picked here. I took the 52-week high in the Nasdaq, right? Because it's just such a pretty chart. So let's just kind of soak this in, right? Here's the low back in end of October. So whenever you were planning your Halloween costume last year, which maybe Mike will share with us what he was at Halloween last year. But around that time, it hasn't necessarily been a straight line up. But when you start to zoom out, it's pretty much straight line up, right? With a little blip in April. Oh yes, cry it out. But right back in the game, right? So there's your thunderstorm in the Nasdaq. So when you think of it, it's like, okay, well, will this last forever? Go out to the 5-year chart. Well, no, there's bigger storms. Like in 2022, we had the big interest rate, increase. So up from 0 basically to 5%, and that hit the market pretty good. So what do we have going on this year? Well, two things really that are going to be the market driver. One is the volatility associated with elections. And, it seems like we get more unique with elections like every time. And then we also have the potential for rate cuts. We were pretty bold earlier this year as a firm to say that the Fed wasn't going to cut rates in 2024. So far, that has been true. We went from a market forecast of the generally accepted as there would be 6, then it went to 3. Now it's sitting at 1. So the rest of the world's coming in line with what we thought would play out. But I'm starting to think there is a pretty good chance that there will be 1 by the end of the year. So I'm ready to move off of my original thesis. But so when you think, okay, rate cuts, what's going to happen? Well, when you start cutting rates, money gets cheaper. Basically, this whole 2022 move down would be reversed, right? You would see that move up. So that'd be a big catalyst for the market. What can go wrong there is the Fed cuts rates once, a quarter point, whoop-de-doo, and then they stop. Then the market would freak out and throw a tantrum, right? So then it would sell off. So there's a lot of uncertainty involving with how the Fed's eventually going to start on a path of bringing rates down. But I think the major moves, we may see a rate cut this year, but the major move will be in 2025, is my opinion. And then so that's going to bring some volatility. The election's going to bring some volatility. So how do you defend against that? Well, here's our top 10. This is no kidding, real time, last updated 6 minutes ago. Let's go. Boom. Let's get it right now. There we go. So there's your real time update of our top 10 holdings. This is across the book for Ankerstar Wealth of the stuff we have custodied at Schwab. So you see the top 4 there are playing offense, right? We're trying to be in big tech as well as Bitcoin for specific theses, if you will, and we're trying to make as much money as we can. And obviously that we've benefited significantly from the move up in those this year. Even Apple, which was kind of out of favor for a while, is now back. And of course, Monday they have their Worldwide Developers Conference where I will make a bold call. It's going to be wrong, but I'll make it anyway, that the next iPhone's called iPhone AI. It's probably just going to be iPhone 16 or something far less interesting than iPhone AI. But if Tim Cook could listen to Steve Ankerstar, which I don't think he does, he would name it iPhone AI, and it would sell like wildfire when they come out in September, October. But look at the last 6 holdings. So the first 4, you're like, yeah, I know exactly what those are. Then you look at the next 6, you may have no idea what they are. Well, each of them are defensive instruments, if you will. Kick off a lot of cash, which again, that's defensive, right? So high yield with just cash coming back in. So if the market does sell off, you're there to poised to buy more when it's lower. USFR is Treasury. Is VCLTs, long bonds. JEPI is the S&P 500, but with options income that varies anywhere from 8 to like 12% annually, which means it's about 0.75 to 1% monthly of coming in. You have some high yield there with the First Trust holding. You have Blackstone private credit, and then you have buffer. If you heard anything at the beginning of the year, we said long and strong in Q1. Sometime in Q2, we'll start building defense into the portfolio. So buffers kind of come from almost a no holding up to almost $1.5 million, and more of it's going in every day as we rewicker the portfolios going in. So that's what we're doing to protect you from the volatility that we perceive is coming. So a lot of inside baseball there this morning. Hopefully you got a lot out of that. I do want to say though, and I should have mentioned this up front, I'll put it in the notes. The week for me, I do want to get a bunch of client meetings done. So I'm going to target the week of June 17th through 21st. I have an entire week. I'm wiping everything off my schedule to just do client meetings. Most of those will be on Zoom because I do want to try to get through everybody in 1 week. Again, I'll put that in the notes to try to maximize us talking before we go into the second half of the year. All right, so I'm going to stop talking, which I promised to do, and over to Mike. Let's hear what's going on in the great state of Texas.
Steve, I'm ready to book my ticket to Texas. Let me get my house sold.
Is that a one-way
and my
ticket,
plane
Mike? Have you seen the light?
A one-way ticket, because if the exchanges are moving to Texas, it's just everything's in Texas, right? So, and I'm sure the news is out there. It's funny you have somebody from Ohio reporting on it. I was looking for the Buckeye exchange, but it doesn't seem to exist. And I did hear Josh Brown say we should call it like the Tex-Mex, or I don't know. There's all kinds of different stuff. So exchange and I mean, when you think stock exchanges, you think New York, right? I mean, that's what comes to my mind. New York, the financial hub. I mean, I'm listening to some old things about Hamilton and the Treasury, and it's New York, New York, New York, till now. So Texas is looking to create their own exchange, and there's some major companies in there. Are major companies at least headquartered in Texas. But anyways, the exciting about this is, Texas is tied for second with New York on their number of Fortune 500 companies. So right there, we should just stop and say that's incredible, right? So yeah. Texas is tied with New York. When you consider an exchange, or you consider anything for competition, you want to say, how can we be more efficient? How can we, save these companies money? How can we make regulation easier? That's why companies would want to be on that exchange as opposed to New York. And some of this is the effects of New York's own doings. You're going to see some conversation about anti-woke exchanges. And this kind of scares me, because I would rather keep this on a efficiency tax basis rather than turn this into a political hot button. But you're going to hear that conversation come up. When we look at Texas companies, these are the top 20 Texas companies on the Fortune 500. And so you got some, obviously the big oil ones are there, and some that may surprise you. Obviously, you're not surprised by Tesla, but it's there. And then Oracle, USAA, and somewhere, not Fortune 500, but way down that list is GameStop. So, let that run, and then you'll have another one. So let's see here. What do we have? Yeah, like I said, as far as part of this is due to a backlash climate-friendly diversity, equity, inclusion policies that are very expensive to incur, that the New York Stock Exchange is putting on there. BlackRock and I think it was Citadel, 120 million will have put into getting this off the ground. I did find a potential timeline that said looking for approval in 2025 with first listings in 2026. This is all talk right now, right? All talk, and we're going into the the political cycle. So who knows? I can only imagine if we saw some this come up as far as into a presidential debate, that would be interesting. Will it happen? I don't know. I wish I could say there's a way to buy the hype, but we'll see. I don't know if there's any way we can invest in this. I love the idea. And part of the reason I love the idea is just when you consider the business friendly environment within Texas. And as Steve mentioned, one of our holdings is TXS, which is Texas Capital. And you can see a graph here. I mean, the graph looks, it's not huge numbers, but very similar to the Nasdaq graphs that Steve showed. But within Texas Capital, and this is the TXS is the ETF that we invest in. These are the biggest companies headquartered in Texas. And I just thought, why would you just invest in that? And somebody asked me the other day, is there a similar thing for Arizona or for, they didn't ask me about Ohio, but, is there something for Ohio? Well, the thesis for Texas is because it's business friendly. That's why you would do that. If they created the California or New York listing of the same, I guess we would short it, right? So, what companies are in this TXS, and I just thought was interesting. Tenet Healthcare, Exxon, McKesson, CrowdStrike, which just blew up yesterday. Well, I blew up as in great earnings and up like up like 12%. Charles Schwab, Tesla, and Tesla's actually down. I mean, if we saw a rebound, this ETF could go even higher. And then I have to note that I see GameStop down there 2%. So, we'll see where that goes. So therefore, if GameStop goes to 400 and everyone's all excited and you're like, oh, I missed it. You didn't really miss it because you had a little piece of it bought very inexpensively. So with that, good thesis for a Texas exchange. I like the thesis. There's got to be a lot of politics to moving the capital markets from New York to Texas. I'm sure it is not as easy as we just open the building, get the electronic exchanges set up. There's going to be a movement to get companies to move from one exchange to another. But stay tuned. We'll give future updates on it. And, let me get my plane ticket booked. Maybe I'll head to, and it would be in Dallas. Let me get down there. Although I don't know if I could give up my Bengals tickets for Cowboys. So I don't know. We'll see.
Well, I will tell you, it may be unclear to you, Mike, but it's crystal clear to me what the way forward is here. I will reach out to these folks and offer some office space at the new Ankerstar Wealth family office building. I can carve out some room for them to hop in bed with us here in mighty Round Rock, and we can take on New York City. But it will be interesting to see if this thing happens. I mean, that. Somebody asked me last night, and there's like, is this a good thing or a bad thing? I'm like, I don't know. I don't know that the world needs another exchange. It seems like the exchanges we have work just fine. I mean, if it's politically motivated, I don't know. We'll see. Crazier things have happened. But like I also told my parents when they lived in Mike's hometown up in Ohio, I said, you need to hurry up and get to Texas because at some point we're going to close the doors and leave the union. There's precedent there. When the United States gets too crazy, Texas wants to have the option to just go, we're our own country again. Kind of thing. So, and maybe we need a stock exchange to facilitate that. So maybe it's part of the underground Texas succession master plan. That's me being a conspiracy theorist. I don't have inside insight there. So, all right, good stuff today. Thanks so much for listening in. We will be back at you tomorrow on Friday morning with more good stuff. We'll talk to you soon.